Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. With me is Shell Bhatnagar. This is Market Today, a show where we'll help you understand the closing action on the D Street. Well, the Nifty is off the lowest point of the day. It's holding about the 22,000 mark, 66 points higher in trade. But there are several sectors that are still reeling under pressure. The Nifty Bank, for example, is down by 0.1% in trade. Now, when we talk about the other sectors on the Nifty, we will be able to see that there is still some pressure that is being seen on the broader markets in today's trading session. So the Nifty mid cap and the small cap 100 index, they are still reeling under pressure right now. Even though no, they are also up right now. Now, when we talk about some of the other sectors, like IT is still down, realty is still down in trade, but many sectors have actually pulled up smartly in trade too. If we look at the metal space, that's the one that's shining the brightest, 1.3% higher in trade, a percent higher for the FMCG index. You also have the autos that are driving in a faster lane, 0.8% of a move. Then you also have the half odd percent increase that you can see on the PSU banks, healthcare, consumer durables. They're all seeing some kind of improvement coming in. On the Nifty, you have BPCL that continues to hold its top post, 4% high in trade, and that's after the earnings as well as the bonus announcement. Hero Motocorp continues to drive sharply higher, about 3% up right now. Adani Ports, NTPC, Asian Paints and Power Grid are some of the other big movers. However, it's the F&O space and the Nifty 500 basket that's looking at several other stocks that are actually doing they are moving up very sharply, especially on the F&O space. The top mover right now is Dr. Lal Path Labs. That's up by 7 odd percent. This is after the earnings. Polycab also is seeing a sharp uptick right now, 5.5% higher. You also have Metropolis Healthcare, Muthoot Finance and Berger Paints are some of the other big movers as far as the F&O space is concerned. Shell.
Good afternoon, ladies and gentlemen. Let's get the Nifty chart right there in front of you. And the biggest mercy for today is that not only are we in the green after 4 solid days of very strong selling, we are also above 22,000. So while we remain aware of whatever is the chatter in the market, whatever is the noise, the biggest takeaway, at least so far till 2:36 p.m. is the fact that the Nifty is in the green, and this is a rare mercy that the bulls are being shown by the bears. This is a very big plus. Let's look at the most active counters, and at this moment it's Polycab 5% higher at about 61.20. This is post earnings, which the numbers were really good. The reason why this is a very sensible day also is that even if you see a bit of red on Kotak Bank, HDFC Bank and State Bank of India, there are really no volumes at all. So these are some of the small mercies in the world that I am very grateful for. Advanced decline ratio is still in the positive, favoring bears. 1400 shares in the green, favoring bulls. 1500 shares in the green and 822 in the red. It is a day that belongs entirely to the metals pack, chiefly Hindustan Zinc. The counter is 13% higher, 12% higher at 513, and because it's the end of the week, we have to calculate the 2-week change as well, which is about 9%. Very strong moves coming in on absolutely breakaway volumes when it comes to Hindustan Zinc. I believe Mr. Amit Goel is with us, co-founder and chief global strategist at Delhi-based Pace 360. Good afternoon to you, Amit ji, and a very warm welcome. I think we are back in touch after maybe 10-15 years. Such a pleasure to host you. How do you see markets from current levels? Is more pain ahead on the Nifty, or is the selling more than enough?
Firstly, thank you so much for having me on, and it's good to get back to you. I mean, good to get back with you guys. Thank you so much for the opportunity. So, my personal take on the market is that a few weeks back the markets were priced to perfection, and while yes, the P ratios are probably not looking high if you look at the projected 24, 25 earnings. But fact of the matter is that the global macros are looking pretty weak for the next few quarters. Looks like the US is going to enter into a recession within the next 2 to 3 quarters. And the effect of that is obviously going to be felt all over the world. So India, of course, is not very expensive if you look at, if you compare it with the with the P ratios that happened post COVID, we were north of 30. But considering that a lot of earning growth has already happened over the last few years, I feel that the earnings projections for the next few years are going to be a lot worse than what is being projected currently by the analysts. And if you look at markets from that standpoint, the markets look extremely overpriced, or at least that's what they did a few weeks back when Nifty was trading at all-time highs and so on for these small cap and mid caps. Now I think markets have corrected in the last couple of weeks, and mostly the reason has been that the projected BJP numbers have been coming down. So the betting sites were projecting 325 plus for BJP standalone till about 3 weeks back, and now that number is more in the vicinity of 305 to 310. So some of the euphoria related to election outcome has obviously faded away. My sense is that there could be somewhat more downside before the election results. But in case BJP actually manages to get 300 plus numbers on 4th of June, there is probably going to be a relief rally. But on a longer term basis, I still feel that we are very richly valued, and markets will not be able to justify these valuations on a more sustained basis.
Amitji, how are you asking your clients to navigate this volatility? Are you a buyer at these levels of the index, now almost 2 months low, or have you shifted a large position into cash?
Okay, so see, we are a multi-asset macro top-down asset management company. So we are completely agnostic towards any single asset class or any sector. So we have been sitting on pretty much fixed income and precious metals from our portfolio standpoint over the last few months. And we have not participated in this equity rally for the last couple of months because we thought that the excesses that are being committed are way beyond reasonable limits, and the market is going to correct, and the traders are probably will have to pay back for some of the excesses that have happened in the recent past. So we in any case have been sitting on very low equity exposures, and that continues to be the case even today. So if in case there is a further correction between now and May end, we will use that to start buying equities once again after being on fixed income and precious metals for the last 2 months. And then accordingly, depending on the election results, if post-election results there is again some sort of a euphoric rise, we will probably use that to sell some of the stocks that we buy before the results. On the other hand, if the market moves down again post the election results because the market is disappointed by the results, then of course we'll buy more, because this bull market is eventually going to die down, but it's not going to die down tomorrow. There are going to be relief rallies, there are going to be falls. So we would be trying to play these waves of buying and selling over the next few quarters while believing in the fact that the markets are extremely richly valued. So you cannot buy these markets. You should not take exposure into stocks when the markets are euphoric. You should buy only when there is a deep correction. And we will do that in case we get that opportunity over the next, let's say, couple of weeks.
Good afternoon to you. I wanted to understand from you about a few sectors that have again come back into limelight, and how is your sense after the earnings? One is FMCG and the other one is the IT space. First on FMCG, sir, how have you assessed the kind of earnings that have come about? Are you looking at the promises that managements are highlighting with respect to rural recovery, green shoots emerging, and of course hopes on higher, like normal monsoon also coming in? And how do you look at the entire FMCG space on that background, and IT space as well? No surprises there, mostly in line, and no outperformances from the IT space this time around in the earnings. The outlook also looks rather on the weaker side than a brighter side as of now. So these two pockets particularly, and any particular stocks that you can highlight from here.
Thank you so much, Sakshi, for asking that question. So I think in the FMCG space, I feel that there are a lot of fund managers who are just trying to hide behind FMCG because they are, they are trying to go cautious into the election results, and they do not want to be overweight into sectors which are cyclical, where the operating leverage is high or where the valuations are very, very high. So many of them are trying to hide behind the safety of FMCG, utilities, and to some extent even pharma. Fact of the matter is that Indian FMCG space itself is exorbitantly priced. Nowhere in any major market in the world today you would find an average FMCG good quality company trading at north of 50p ratio. So this is completely unjustified in my opinion. The only FMCG stock we kind of like, maybe we would not buy it at this point, but in case we get a correction, we may buy that stock, is ITC, which is, let's say, trading at about 25, 26 kind of valuation. Rest, everything is too expensive. I do understand that the rural economy, which has been in some sort of a recession for the last couple of years, there are some green shoots, and the monsoon is also expected to be pretty normal, or maybe even slightly higher than normal. So that's a good omen. But my problem is that the sector is so exorbitantly priced, and there are already so many fund managers and asset management companies which are hiding behind FMCG. So we would not want to touch any one of those expensive stocks with a barge pole. As mentioned before, we are a multi-asset macro top-down asset management. So we have no obligation to buy stocks at all. We do not, unlike the equity fund managers who need to have a certain equity exposure, they cannot keep money in cash beyond a point. So they have to take refuge behind some stocks which they think will fall less than the rest of the market in case there is a deep correction. We have no such obligation. So we would rather make our we've been delivering about 20% return for the last many years. So we would rather make our 20% from other asset classes than to go into FMCG at a price earning ratio of 50 to 60. In spite of the fact that there might be some recovery in the rural consumption, urban consumption, I do not see any major uptick. I think there is a K-shaped recovery, and the bottom 40% of the urban consumers are they have a pretty bleak sort of a budget ahead of them. So I would not buy FMCG at all, except maybe for ITC. That too, if we get a reasonable correction from the current levels.
Right. Amit, now it's fairly clear that you are a very cautious investor, and you value safety as well as inexpensive valuations ahead of momentum, as well as froth. Tell us within the investing universe that you've suggested to your clients, what is your highest weightage? Which asset?
Okay, so our highest weightage has been on gold, where we realized last year around October, when gold was trading at about $1,800, and in MCX it was at about 58,000 rupees. We just felt that gold is way undervalued, and we thought that this was the most asymmetric risk return opportunity out of any macro asset class for this entire rest of the decade. And that is exactly where we are right now. So we invested very big amounts of our PMS and our other products money into gold in the form of sovereign gold bonds, gold mining companies, and so on and so forth. And we are predominantly holding on to our positions, though we have booked some profits in the last few days heading into Akshaya Tritiya. So we are a very, very value sensitive and value conscious asset manager. Wherever we feel the markets are too euphoric, that asset class may be anything. It could be equities, it could be precious metals, it could be long-term bonds. We would just stay away from any asset class which is overvalued, irrespective of how much time we may have to remain out of that asset class. We will not participate in any bubble whatsoever. We've not done that in the last 29 years, ever since we came into being, and we will not do that ever. So right now, our biggest exposure is on precious metals, and it is on long-term Government of India bonds, where we are extremely bullish on Indian government 30-year bonds. I think that could probably deliver about 30% absolute return in the next 1.5 years. And if you were to ask me what return equities would give, or a diversified portfolio would give over the next 1.5 years, I would say it could be very, very low single digits positive, or it could be even in double digits negative. So vis-a-vis that, our fixed income portfolio on an average should deliver us about 25 to 30% absolute return in the next 1.5 years. So this is what we do, and we are extremely sensitive and conscious about which asset class we are buying, what is the valuation, what is the potential risk, what is the potential return. That is, we do this day in and day out, and which is why we are out of equities at the moment. But yes, in case there is a deep correction between now and the election results, we'll definitely take some exposure.
Right, Amit, it's been such an educative 15-20 minutes listening to your global view, not only on the impending US recession, which might have a higher probability than what it was maybe 6 months ago, and of course the allocations that you have primarily on gold and Government of India bonds. Thank you so much for your time, and as always it's great to be in touch with you. We shall now be meeting more frequently. Thank you so much.
Thank you so much for having me on. Thank you so much for the opportunity.
Right. That, ladies and gentlemen, was Mr. Amit Goel. He is the global strategist for Pace 360. This is a portfolio management company based out of Delhi, and you've heard his fairly bearish outlook on Indian equities, and of course a very strong take on how Government of India long-term bonds and of course precious metals will behave in terms of the coming quarters. Sakshi.
Absolutely, and let's get back to the markets now. 22,030 right now, 72 points higher on the Nifty. Not much has changed. It's the same movers. BPCL, power majors like NTPC Power Grid. You have auto companies like Hero Moto continuing to drive up, and of course the earnings boys that are continuously rising in trade. So stocks like Dr. Lal Pathlabs, that's up 7%. You have GE Shipping, Venky's, NCL Industries, Polycab. These are the stocks that are actually rallying anywhere between 7 to 9% among all the earnings that are coming up. But our focus right now is going to be on the ETF front as well. That's the exchange traded funds. Now we are going to help you understand what exactly are ETFs and why at this point in time when extreme volatility has hit the markets and probably some correction has taken place, it will be a great idea for you to take exposure via ETFs in the stock markets, and which are the popular ETFs that you should be looking at. So Shell, first up, do tell us, and a wide part of our audiences as well, what exactly are exchange traded funds and why should a stock market investor be really looking at them at this point?
Okay, Sakshi, that's a wonderful question, and let me just make two very clear disclaimers at the moment. I am a huge consumer of ETFs in my personal portfolio, and what mostly I do is specialize in buying pain that is happening in Indian equities at this point of time, and of course the one that happened in Chinese equities about 3.5 months ago. Okay, let's begin with the very basics. ETFs are exchange traded funds. They are exactly mutual funds, but you can buy or sell them from your broker. So that's a very big plus. Because they track passively an index or a specific sector like FMCG or IT or PSU banking or central public sector units, they have lower management fee, because the fund manager, all he does is he looks at the Nifty, looks at the weightages of specific stocks and buys them exactly as they are in the ETF. There is zero intelligence that goes into making an ETF or managing it. Therefore, the cost structure and the fee structure of an ETF is probably less than half of what it is an equity diversified fund. Sakshi, they are the best way to track or invest in a specific sector or a specific country. For instance, if you and I or any individual in India is sitting locally and he wants to buy the US markets, has very little understanding of how they work, then all he has to do is tell his local asset management company in India to buy a US based index fund tracking the NASDAQ, tracking the S&P 500 or tracking the Dow Jones index. Normally we look at the most liquid and the best indices to track. Therefore, you can buy sitting in your drawing room in Delhi, in Bombay, in Noida, in Ghaziabad, in Jabalpur, the US market at the push of a button. Now what happens after that is that your investment is now in sync with the US index, and not only do you get a diversification into your local portfolio, but you also get rupee depreciation. So the best performing equity ETFs in the country, Sakshi, have actually also outperformed equity diversified funds. The one that comes to my mind is Motilal Oswal Nasdaq 100 fund and the Mafang ETF. If you see the kind of returns that they have given on the longer term, they are mind boggling, because they buy the asset, a dollar based asset, in rupee, and when the rupee depreciates over 3-4 years, 5 years, when they sell an appreciating dollar, they not only make the difference of the buy and sell price, they also give you the rupee depreciation. Therefore, they make a lot of sense. So this is the broad background of how ETFs work, Sakshi.
He understood that. So let's also discuss and make our viewers really understand which are the most popular ETFs that they can really look at.
So Sakshi, about 3 years ago, and whenever, if you remember, we have Ashish Chaturmota on the show, I never failed to thank him of his brilliant call that he had given on PSU banking bees. I am requesting the PCR to please fire the long-term chart of PSU banking bees, which are at 78 or 79 rupees at this point of time, and the first purchase was done somewhere at 28 or 29 rupees. So you can well imagine, yes, this is the beautiful chart of the Nippon PSU banking bees, and look at the long-term chart. 1 year the counter has given you a return of 80%, Sakshi. Tell me which share gives that on a consistent basis and without risk, you know. So you should have a certain quantity of money deployed in such assets. I am requesting the PCR to please fire the CPSE ETF. You know, it contains stocks like Power Grid, NTPC, Coal India, BPCL, HPCL, REC, PFC. Are these familiar names, Sakshi? We discuss them on a daily basis, right?
Absolutely.
But look at the return. Has NTPC doubled in 1 year? No. Has Coal India doubled in 1 year? No. But the CPSE ETF has. So that is the beauty, ladies and gentlemen, and that is why you need to have ETFs as a part of your portfolio without spending much impact or much effort. You are able to make very serious money by buying into these ETFs. Now, why I am anxious to discuss this thread today, Sakshi, is because two of India's largest ETFs are the largest funds. It is the SBI Nifty ETF and the SBI Banking Bank Nifty ETF. I am requesting the PCR to please fire their charts on air, and you will then see the logic of what I say. The Bank Nifty, ladies and gentlemen, has corrected 5% from its top, and the Nifty has corrected 4% from its recent top. So what needs to be done very sensibly, Sakshi, is that if you wish to now take advantage of the swing trade that will come, and it will definitely come, I am guaranteeing it almost. So all that you have to do is you buy the ETF when the main index corrects 5% or 10%. Now we don't know whether the correction on the Bank Nifty will be just 5%. From Monday it can fall further. So what we do is we break our buying lots into 5 or 7. Suppose you want to invest 1 lakh rupees. So you break it into 15,000 rupees. So you have 6 or 7 buying lots, and each day you buy the ETF for 15,000 rupees. Okay. You will notice after purchasing it over 1 week or 10 days, in 20, 30, 40, 50 days, Bank Nifty will have reclaimed 50,000. At that point of time, because you have bought the ETF at a lower average, you will see you are sitting on a very smart game. The two most active and the most volatile ETFs are the junior Bs, the one that you just saw at about 660, 670 rupees, and of course the Bank Nifty ETF. There is no doubt in my mind, Sakshi, that both the junior Bs and the banking Nifty are compounding instruments, which means that they will only rise over a period of long term. I am almost embarrassed to tell you that my first purchase of junior Bs is at 80 rupees. It is now at 670, and I regularly buy this ETF. Similarly, the SBI Bank Nifty ETF is exactly the mirror image of the Bank Nifty. It is only 1% value of that. So 480 rupees, and the Bank Nifty is 48,000.
That's true.
Right? So that's the beauty. In Bank Nifty, as the SEBI statistics tells you, thousands and millions of traders die every day because they trade the Bank Nifty. If you buy the Bank Nifty on a daily basis for 10 days in a month, ladies and gentlemen, you will make tons of money 2 weeks, 3 weeks, 4 weeks later. So that's how sensibly you buy the dip in the market via the ETFs. Actually, it is one of the most profitable and the least risk exercises that you will ever do. Today is 10th of May. On 10th of June, we will again talk about these 3 ETFs, especially the Bank Nifty ETF. Sakshi.
Wonderful. So that's a brilliant way to take an entry into the markets, and that's the beauty of Market Today and on Business Today television, where you get to see such wonderful insights shared by Shell as far as which is the best way in case you've been looking helter-skelter in this kind of market, in this kind of volatility. What is the best way to take the benefit of it? We've told you in the simplest way possible the ETFs and which ETFs you need to look at. Yes, Shell.
Sakshi, just 2 points of mention. You remember we talked about pain in Chinese equities 3 months ago. You know where the money is going by selling on a daily basis in India? It is going only to China. Nippon Hang Seng ETF has moved from 235 rupees to 350 rupees in a span of 3 months. Today it's up 5%. Just imagine, we are crying tears. There is so much of pain. And if you had sensibly bought the pain via ETFs, the Chinese market, you would have made very decent money. Mafang ETF, Sakshi, the purchase price is 33 rupees. It is now at 99 rupees in a span of less than maybe a year or so. So ETFs are beautiful instruments provided you know what you are doing, and they make tons of money with the least possible risk. Sakshi.
That's wonderful, Shell, and we promise you viewers that we will chunk this portion out for you and put it up on our YouTube channel and on our various social media platforms so that you can go back and watch this again to really see how ETFs have performed, what exactly are ETFs. Everything has been explained by Shell very beautifully in this space, and of course then you can get in touch with your experts to have you guided as to how should you be approaching these ETFs at this point. Let's get back to the markets now. We have another guest joining in. Nilesh Jain is with us. AVP Technical Research of Centrum Broking is now with us. Nilesh, warm welcome. Thank you so much for taking the time out. See, with your coming, we are now seeing a 100-point tick on the higher side on the Nifty 22,058. It's recovering and recovering sharply. Where do you see the markets headed now?
Good afternoon, Sakshi. Good afternoon, Shalenji. Good afternoon, everyone. So, looking at the today's move after a fall of almost 5 consecutive sessions, I think Nifty had a reason to find support near about 20,000. It has a psychological support as well as if you look at the 100-day moving average, that is also placed at 21,990. And at the same time, if you draw a line connecting all the recent lows starting with 24th of January, then Nifty has been trading in a rising channel, and currently it has reached to the lower end of this particular rising channel. So multiple and cluster of support is now placed at in the range of 21,900 to 22,000. So we feel that there could be possibility of a pullback from here, and this pullback may extend further towards 22,200 to 22,400, and it may face resistance once again near about 22,350 zone, that is again a 21-day moving average and 50-day moving average. So looking at the overall structure, I think we have a good reason for a pullback to continue. And today we'll be getting the weekly close. And if at all Nifty manages to close about 22,000, the likelihood of this particular close is very high. Then in the coming week, there could be possibility of a short covering as well. So yes, we are playing this pullback and comparatively the Nifty structure is looking more promising compared to the Nifty index, compared to the Bank Nifty index.
Namaste Nilesh ji. Very warm welcome to you on market today. A very good view coming in on the Nifty and the Bank Nifty from your side. We are at the end of a terrible week. Prices have been compressed, sentiment has gone for a toss. People are, shedding tears of blood. At this point of time, is there anything on the long-term charts that catches your fancy? Maybe a view on LNT or anything that looks good?
Absolutely. So before I give any comment on LNT, I just want to highlight one buy recommendation that is from Astral. So this particular counter is giving a fresh breakout and a very good chart structure here. Close to 9% fresh OI addition is happening. So good build up on the long side as well. And at the same time, the stock has hit a fresh record high today. So it can be a good BTST bet, or maybe from a short to medium term point of view, Astral is looking positive and it is giving a good consolidation breakout. So immediate target on the upside that comes around 2180 to 2200. Position target comes around 2300, and stop loss for the long position in this spot can be placed somewhere around 2135. So that should be the stop loss for the long position. So Astral would be a preferred bet as of now. Apart from that, the Nifty Auto Index is constantly moving in a high top and high bottom territory. And the stocks within this space that we are liking is Tata Motors. It has again given a good triangle formation breakout a day before, in fact, in the yesterday's trade. And again, 2% OI addition here as well. So Tata Motors, this particular counter looks positive for 1065 to 1075. Stop loss can be placed somewhere near about today's low, that is 1030. So all these are spot levels. And lastly, just if you look at the structure of the LNT, we have witnessed a gradual decline in the last few trading sessions. It looks like it has filled the gap that we saw on 4th of December 2023. I think there could be possibility of a pullback, or I would say a relief rally in LNT after a recent fall that we saw. So it may test the levels of 3300 and 3350 on the back of a pullback. Stop loss for the long position can be placed somewhere around 3230.
Okay. Got that. Well, we are getting Bank of Baroda's numbers now. NIMs have increased over here from 3.10% to 3.27%. Although the slippages have also increased from about 2618 crores to about 3200 crores. This is on a sequential basis again. We are getting more details now. Let's see how the NIIs have shaped up for the bank in this quarter. We do have the NII number now. I think it's at 11,793 odd crores. This is again up 2.3% as well. The stock, let's look at how that one is trading at this point in time. I think Bank of Baroda is slipped, in fact, about 2.8% lower, and a sharp downtick after the earnings. And we'll look at the kind of loan recoveries that have come in. I'm waiting for the NPA and the gross net non-performing asset ratio also. I'll scout for those numbers. But if you could look at the chart of Bank of Baroda and tell us, Nilesh, what do you spot here?
So Sakshi, structure-wise, no doubt we are witnessing some selling pressure from the levels of 280 in last few trading sessions. The stock has started moving in a lower top and lower bottom territory. But good part is that it has a good support, immediate support of 100 DMA that is placed at 253. So it is exactly hovering near about those levels. If at all it reaches the same on the lower side, then we might see further selling pressure here as well. So we are expecting more sort of a consolidation. And once this consolidation gets over, we can expect another leg on the upside. So major undertone is looking positive, but short-term structure is slightly on a negative side, and it may test the levels of 250 to 245 in the short run. So yesterday we saw the numbers of SBI. So out of these two, given a choice, I think State Bank of India is fairly placed, is hovering near all-time high levels. So structure-wise, SBI looks strong. For upside target of 850 to 880, their stop loss can be placed near about 800.
Okay, understood. I think there are fresh slippages of 2855 odd crore rupees, and that seems to be the issue right now as far as the downtick on the stock is concerned after the results coming in, and the view we've already shared with you on Bank of Baroda. We also got just a little while back even Cipla's numbers from the pharma pack. Nilesh, I wanted to ask you, profit here has come in 79% higher at 939 crores. Dividend has been declared at 13 rupees per share for this one as well. Revenue from operations have increased by 7 odd % year on year basis. There was a sharp downtick, but then a recovery on the stock from the lowest point as well. Healthy set of numbers coming in from Cipla. How do you look at the charts, and would you be able to give us a view on this one?
So Sakshi, this structure here as well is looking slightly on a negative side, and stock is reacting on prima facie on a negative side. It is trading well below its all short-term moving averages, and today it looks like it is witnessing a short build-up as well. So major support of 200-day moving average for this particular counter is somewhere placed around 1295. So from current level, we might see another 2 to 3% fall, and it should defend its 200 DMA post, and we might see a pullback. But as of now, it looks like we may see a further follow-up selling going forward. So it is better to avoid taking any contraband at current level till the time we spot any reversal on the chart. The structure is slightly on a negative side, and on the upside, 1400 is the immediate resistance, and 1295 is the immediate support.
Okay, we have some very important statements coming in from Cipla CEO. Umang Vora in the post earnings press briefing. I'll read out a few statements from him. He's saying that US sales in the coming quarters will be higher than the January to March quarter. A positive statement on that one. The FY25 US sales, he believes, will be driven by new launches and the market share gain. A very important update from Cipla. They're going to be looking to launch the obesity drug in India. That's a very important takeaway. The other important takeaway is that they're also saying that they're bullish on the India business over the next 5 to 7 years. and the company is saying that they are open to partnering with Eli Lilly for diabetes related drug as well. So those are some of the important statements that are really coming in from Cipla as of now, and of course the entire pharma space is in the thick of action. Remember, it was Biocon earlier which had given out some statements with respect to launching of the anti-obesity drug in India in hopes of that. Dr. Reddy's is in the fray as well. Sun Pharma is in the fray as well. We are going to be watching out for this entire space. In the entire pharma pack, Nilesh, how are you looking at the promising stories?
So Sakshi, of late we have seen a lot of action in the Nifty pharma space, and a few stocks which have done quite well, and a couple of stocks where we have seen a lot of underperformance that has continued. But one stock which is indicating a possibility of a revival, that is Biocon. So a lot of underperformance from this particular counter within the pharma pack. The stock has completed its retracement, and from the levels of 480, it has constantly forming a lower top and lower bottom formation. Now looks like a good base formation and a good reversal as well. So yes, Biocon looks comparatively better placed, and we can expect up to continue towards 315 to 320 in the short run. It has a good support near about 293, so that should be the stop loss in the spot level. So within all pharma pack, Biocon is comparatively looking better for a pullback to continue. And apart from that, Sun Pharma is another stock, index heavyweight, which is currently undergoing through some consolidation, but it has a good support. I would say a strong support near about 1460. So that should be the stop loss, and Sun Pharma can be added as a positional bet for upside target of 1550 to 1600.
Fair point. Let's look at some other high beta, low ticket items which are now buzzing in trade. Remember, some kind of sanity seems to have come back into the markets. We are now at 315. The last phase of this very painful and entirely forgettable week is just about to get over. And Sakshi, ahead of the weekend, what's clicking? Zomato. Again, it's above 20170, and I have seen 1, 2, 3, 4, 5, 6, 7 block deals. The big one is for 3 crore 40 lakh rupees, but very, very strong volumes that are coming in. Nilesh bhai, I know you don't use Zomato at all, but what are the charts telling you?
So just a clarification, yes, I do use Zomato sometimes. Structure wise, technically I'm liking this stock as well, because the kind of run up this particular counter has given from the levels of almost 50, 60. I think this momentum looks strong, and at current level it is looking strong as well. So on the upside we can expect another 10 to 15% kind of a move, and the upside target comes around 215 to 220. It has a good support near about 190. So if we see any dip towards 195 to 198, that may be used as a buying opportunity, and upside the stock has a potential to test 215 to 220 in the short run.
And Shell, just wanted to interject there and say one thing that Nilesh may not be just using Zomato for ordering food. Today, since it's Akshay Tritiya, he is using a lot of Blinkit to order in gold coins for himself, since now gold coins are getting delivered today in 10 minutes flat at your house, and you don't need to bother yourself to go to the jewelry store and in that crowd to buy yourself any gold or silver coins. So I'm sure Nilesh is helping his family to shore up on that gold and silver today. Nilesh can give us that clarification.
So actually, just want to add point here. So that was a news that I just saw in the morning, and that's extremely positive news. But I rather do invest in the gold, but SGB is still the better option for me. So yes, I have a daughter, so I do invest regularly for future. So SGB, where you get 2.5% additional interest as well. So still, I would prefer to go with the sovereign gold bond.
Fair point. So Nilesh bhai uses Zomato, but only for assets that appreciate and not for normal things like ordering a pizza. Pizza तो खैर ये खाते ही नहीं, ये बात तो पक्की है. ये आपको दिख ही रहा है कि इस स्क्रीन पे पिज्जा खाने वाला कौन है, मेरे अलावा कोई नहीं है. But I am telling you, Sakshi, again, very strong block deal. Now for 10 crore 43 lakh rupees, a single block deal of 5 lakh 13,000 shares on Zomato, and it is just increasing by the both volume and price. 203. Let's just see the all-time high on Zomato. It's been days since we've noticed that. I think it's again today. It's just crossed the all-time high, if I'm not wrong. Yes, it did. Ladies and gentlemen, 204 is an all-time high again for Zomato, and it comes on Akshay Tritiya day. क्या बात है, सोने पे सुहागा, क्या बात है जी. So this, and of course let's look at Hind Zinc. I don't want to take a view on Hind Zinc because it's already up 14% today, and today is not the first day of the move. It's like a rocket. In April of 1st it was at 294, and on May it is 529. It's really overstretched, but today because the volume bar is so high. Nilesh bhai, do you want to stick your neck out on Hindustan Zinc, क्या इससे दूर रहें?
See, at current level, looking at a kind of spurt that we saw close to 17%, it is definitely not advisable to chase. But the kind of run-up that he has given, we have also mentioned earlier as well, the stock still has the potential to surpass 500 kind of a mark. But I would say now those who are already holding the long position can stay put, keeping a trailing stop loss below 520. The stock may test the levels of 550 to 580 in the short run. But for fresh long, I would rather wait for some dip towards 480 or 490. At current level, it is better to stay away. It's an avoid.
Okay, fair point. That's a fairly decent view that's coming in on. Sakshi, again, Zomato. 1 lakh shares in a single trade, 204.75, record high. And let's see, we still have about 10 minutes left, but anything beyond within 10 minutes is slightly dangerous because you get hit by the average price of the stock in the last 30 minutes. Remember, NSE and BSE both follow that rule. So fairly strong set closing. Sakshi, what is good is that we are closing, or maybe we are just 100 points above, but in the green, above 22,000. And if the gods are very happy with us, we will close above 22,065. Now if that happens, I'll explain the significance a little later, but fairly strong moves coming in. Let's look at what the pullers and draggers are, and then that will give us a sense. Okay, good news. Reliance in the green, 1% higher. It's contributing 23 points to Nifty's rally. ITC is contributing 19. Bharti Airtel, NTPC and Hindustan Unilever between 8 and 13 points. What is pulling the Nifty lower? It's IT, TCS and Infosys, 17 and 14 points. HDFC Bank, remember, this is a dividend readjustment. M&M and Kotak. Let's look at the advanced decline. Sakshi is really good. We are now at the fag end of trade, and now about 1440 stocks are in the green compared with 790. So that's easily 2:1, or maybe 1.9:1, which is fairly good. And my only prayer today was that let's not break below 21,800, and if the gods are kind, let's close above 22,000. So maybe the gods are kind, and maybe the pain that we saw in the last 1 week may have abated, and it is here that the ETFs will kick in. Every day on average, Sakshi, there are 2,000 crore rupees that fund managers have to invest, that come via EPFO, via SIPs, and of course the purchases that you do fresh in terms of new SIPs form. So maybe we have some sort of a bottom, and the good part is Business Today tracks 19 indices for you, ladies and gentlemen. Only 4 are in losses, 17, 18, 16 are in the green, and the losses are minuscule. Nifty Bank flat, just a minor red tick. Realty, third of a percent lower. The top loser is Nifty IT index down 0.8%, nothing to be worried about. The top gainer is the metals index 1.6% higher, and the energy index 1.6% higher. BPCL, HPCL bonus doing wonders. Sakshi, Zomato 205. The size of the latest block deal is 9.3 crore rupees, 4,56,000 shares. People may not be sort of buying stuff from Zomato, but they are buying Zomato.
Absolutely stunning move there on Zomato, but 323, we'll quickly take BTST or STBT trades that Nilesh has to share for all our viewers. Nilesh, over to you.
So Sakshi, as we mentioned, we discussed about Astral, the breakout that we have spotted. I think there will be a follow-up move in Astral towards 2180 to 2200 on immediate basis. So apart from that, another stock that is on our radar is HUL. So markets have become more volatile, and during this kind of volatility, the focus shifted towards defensive. So within defensives, FMCG space as a basket looks positive. Within this space, HUL is looking quite strong. It looks like it is giving a plug and pull sort of a pattern breakout. So the upside is open up for 2380 to 2400. Stop loss can be placed below 2340. So HUL would be one bet. Apart from that, ABFRL, Aditya Birla Fashion Retail. So that is another stock that is witnessing a short covering move today, and we expect a follow-up move towards 263 to 270. Stop loss can be placed below 253.
Okay, got that. So that's the two stock ideas, HUL and Aditya Birla Fashion Retail, that you can continue to watch out for. Strong move being unfolded on those two particular stocks. Let's again look at some of the other we can spot from the broader markets today. Well, there's a whole host of names. Astra Microwave Products today is sharply higher in trade, 11% odd or so. From the capital goods space, it's MK Global Financials, that's again higher in trade today. We also have Honeywell Automation, that's moving up today. Apart from this, if there is anything else, of course we've discussed Hindustan Zinc, Fiber Web is moving. Not too many names that I can mention, but on Astra Microwave, would you have a view and the kind of move that we've seen today? Is it best avoided, or should we chase?
See, the structure is no doubt looking positive. The stock has been in a secular uptrend, and in last 4-5 years, we have seen a good kind of run up. The structure is still looking positive, but after run up of close to 11.5% today, where good volume activity can also be seen, but the risk and reward is not favoring for the long position at current level. So better to wait for some dip towards 670 or maybe 660 for fresh entry, because the stop loss should be placed near about 635, and the upside is still open for 730 to 760. So these are the two levels on the upside. If somebody is already holding the long position, can keep a trailing stop loss and stay put, but fresh long position should be avoided.
Okay, understood. 326 right now. Nilesh, how do you see the next week panning out for the markets? What would the strategy be that you'd advise for the investors and traders?
So Sakshi, good part is that today the Nifty has defended its 22,000 psychological figures so far. So I believe in next 3 minutes Nifty will respect that, and also 100-day moving average, and also a rising trend line support. So a good close after 5 days of fall. So we are expecting a sort of a pullback on the back of short covering in the coming week. So looking at the today's closing, there will be a short covering in the Bank Nifty as well. It has underperformed for the 8 consecutive session compared to the Nifty index. So a lot of short buildup can be seen in the banking space, in the financial space as a whole. So we are expecting some sort of a pullback rally in the banking and financials as well. So see, if you see in the global market where Dow has rallied for 6-7 consecutive sessions, Nasdaq, S&P 500. So this is the pain that we have seen in the domestic indices only, in India only. So we believe that there will be a recovery, and the recovery may be strong enough to surpass Nifty beyond 22,300 to 22,500. So to play this recovery, there will be few sectors that needs to be watched out for. As mentioned, financial as a whole, NBFC and also PSU banking space. So these are the sectors where we might see a short covering to continue. And apart from that, yes, the Nifty broader market indices, in fact, that space is also looking positive after a carnage that we saw in last 5 consecutive sessions. There will be a positive move in the broader market as well. So yes, focus should be on stocks, focus should be on sector specific. Since the volatility has jumped close to 85% from the lows of 10. So in last 10, 11, 12 sessions, the IVs have moved up sharply. So one needs to watch out for IVs as well. And if at all we see any cool off out there, then that will definitely provide some comfort. So yes, these are the factors that we are watching out for.
फेयर पॉइंट। और नीलेश जी, अगर मैं बॉम्बे होता तो आपके इस शानदार व्यू के लिए आपको घी शक्कर और भिजवाता इस अक्षय तृतीया पर। मेरे ख्याल से वी नीड टू पे अटेंशन टू वन वेरी स्पेसिफिक काउंटर, साक्षी, एंड दैट्स हिंदुस्तान यूनिलीवर. On a weekly basis, when there is carnage all around on the Nifty, Hindustan Unilever is closing 6.5% higher. Britannia is closing 6.9% higher. I am telling you weekly gains. Kotak is closing 4.5% higher. Remember, these three stocks, especially HLL and Kotak, have done nothing over the last 4 years as far as the monthly charts are concerned, annual charts are concerned. In this pain that we are experiencing across the board, there is this huge possibility that Hindustan Unilever may have bottomed out. Only time will tell. But if you were with us on Monday, we had the pleasure of hosting Mr. Nilesh Shah, the managing director of Kotak Asset Management Company, and he clearly mentioned that valuation, FMCG and IT are two sectors where sensible valuations prevail and investors should look at them. Now there are two ETFs available for the IT space and the FMCG space. Ladies and gentlemen, we will be discussing them on Monday when we meet again. Sakshi.
All right, many thanks then Nilesh for being with us on this special edition. It's time to wrap up the markets. Hope you have a great weekend ahead as well. The Nifty BOS is ending about 0.4% higher in trade, 97 points up, 22,054. We are also looking at the Nifty Bank that's closed just mildly in the red, 0.08% lower. So about 47,449 odd levels. When we look at the Nifty Mid Cap Index, that recovered sharply on the intraday space. Nifty Mid Cap 100 Index ends about 0.9% higher at 49,547. Autos, FMCG, these were the bright spots along with the metals that shown very, very sharply in trade. The PSE index recovered very smartly, 1.5% higher. Among the top movers, you have BPCL that ends 4.5% higher in trade today. Power Grid, NTPC, Hero MotoCorp, Eicher Motors and JSW Steel were the other big movers as far as the Nifty is concerned. On the F&O space, UPL shot up 7.8%, Polycab, Dr. Lal Path Labs, Manappuram and Muthoot Finance were the other big movers. On the downside on the Nifty, what did not perform today and in the recovery, TCS, Infosys, Cipla after the earnings, LTI, Mindtree, Kotak Mahindra Bank, Wipro, HDFC Bank and M&M. These were the counters that did not really participate in the markets as of today. On a week-on-week basis, however, the Sensex and the Nifty are still lower, about 1100 odd points for the Sensex, about 400 odd points for the Nifty. The Nifty Bank has ended 3% lower, mid caps down by about 2.7%, small caps down by about 3 odd percent. So weekly we've registered a loss, but the recovery today is surely giving us some hopes of a better week coming forward. And with that, viewers, it's a wrap from both Shell and me, but they do stay tuned on to Business Today Television as we continue to get you all the buzz from the world of business and stock markets, even beyond the stock market hours.
Once again, we have delivered excellent numbers. I'm happy to share that our net profit for financial year 24 is the highest ever at rupees 61,077 crore, showing an increase of 21.59% over financial year 23. Our net profit for the quarter 4 of the financial year 24 is at 20,698 crores, which has increased by 125.87% sequentially. This is despite incurring wage revision expenses of rupees 13,387 crores during the current year period as per the bipartite wage settlement, and after absorbing the additional liability to the tune of rupees 7,100 crore relating to pension liability